Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, June 23rd, 2017. This is part two of two videos covering some of my favorite trade setups in the cannabis, the marijuana sector. In the first video, I spent a good deal at the beginning of the video talking about trading strategies and tips for investing in or swing trading the cannabis stock. So if you haven't watched that video, or any of my prior videos over the last year or two, I'd recommend listening to that, the first 7 minutes or so of that video. And in this video, we're just going to run through the charts. I've got about, goodness, what is it, 20, maybe 20 or so stocks to cover. And we'll go over those with some levels to either buy points or price targets, or both of those, actually both on each of these. Anyways, this is CGRW, Organigram Holdings, and on this one we have a stock that's pulled back to a support zone. By support zone, I refer to when we have two support levels in close proximity. See, we had a reaction back here. There might have been some to the left of that chart. I imagine this chart, in fact, all these charts, unless otherwise I state otherwise, they span 2 years or daily time frames. And that was a level. In this one, again, I talk about this often. These stocks trade, a lot of these stocks trade very well to the technicals. And what I mean by that is you see these extremely well-defined downtrend lines. They are volatile stocks. The intraday swings are pretty high, so you'll occasionally see little intraday spikes above. But when you have a breakout, you'll know it. You'll tend to see volume expansion like you did back here, like you did back here on these breakouts, in impulsive price action. So this is technical analysis 101. You had this downtrend line, a breakout. It was impulsive, confirmed on volume. To try to give you an idea how much that was, it doesn't look like much on these log charts. That was over 100% gain. Then it set up again in this downtrend line. I believe at the time I had pointed that out. That one broke out and went nearly vertical for about a 440% gain. At that point, came back in. There was a downtrend line there, another breakout. Oops. I'm going to move that line. That was one of my price targets now. You got to be careful. TC2000, you grab lines. Either way, it was a respectable gain. Now, at this point, fast forward to today. So here's a couple things I'm watching on this one. I'm watching both that support zone. You can see, again, numerous reactions. That's where a breakout occurred there. And now we have quite a few reactions on that level. So it's working well as support, the top of that zone. And together, collectively, the bottom of that support zone in this downtrend line here forms what we call a descending triangle pattern. That's inherently bullish. What you want to look for is an upside break of the pattern, especially on increased volume, an impulsive breakout. There's your first target level. It's not too far ahead, about 141 or so. If you can buy this one again, if it comes back down to the bottom, even the top of the zone, let's just try to grab the top of the zone and runs up there. That's almost a 40% run. Next target's at 229. That'd be about 127%. And then, like a lot of these stocks, the previous highs, most of these peaked back in right before the elections in late October, early November. I'm talking about the U.S. presidential elections. But either way, that one, if it does challenge those highs again, that's 240%. And again, the longer term prospects, if you're willing to tuck these things away for a few years, you will certainly have some winners and certainly have some losers, I should say, but a few winners should help balance that out. So that's CGRW, CHUM. Not crazy about this one, but I said that in the last video. You never know which ones are going to pan out. Here's the stock. Now it's very thinly traded. That's why you see these choppy looking candlesticks. So just one to keep an eye on. It's a low price stock, only 3 cents a share, but it seems to defend this 2.5 cent share level pretty well. And in fact, I could probably almost draw a downtrend line. So another one with a sort of a descending triangle pattern. And there's this long-term downtrend line above. If this one does start to break out, does start to take volume, let's see here if I can go back. Here's a 2-day period chart. You can see that longer term downtrend line as we zoom out to a 4-year time frame here. So let's get back to the daily chart. Next one up, CNAB, United Cannabis. We have a funky candlestick here. A couple of these stocks have that. It really distorts the charts. but these are big runs. Again, log scale, don't underestimate. That was probably 40-50% or more. And again, a series of well-defined downtrend lines. You just wait for the breakouts. If you notice, I have the volume bars muted down, but I can see it down here. There's a big surge in volume on the breakout. Again, it's set up with a downtrend line, broke out again. Now we had an uptrend line. That uptrend line breaks. That's a break of support, and that triggered the sell-off. So if we zoom in, get rid of that candle, you can see a little more clearly now. Here's a downtrend line that we recently broke above. We had a nice run up to it, popped above it, and we've consolidated. Why did we consolidate? Well, that was in just, about 3 days, that stock ran 116%. So that puts into perspective just how fast these things can move, and it cuts both ways. Don't forget about that. 116 or so percent in 3 days, and here's about a 4-day drop of 73%. So either way, what I view this as consolidation. It popped, broke above. So long as it's above that downtrend line, it's healthy. Maybe it wants to come back in here. There's a support level to test, but it looks good, and any of these levels overhead are potential targets. CNBX. All right, this one, we had a very well-defined downtrend line. Well, let's back up. Let's just see how the charts played out. Here's that choppy trading. See, there was hardly any volume in the stock. You can see these candlesticks start to normalize. And then down here, huge volume. All of a sudden, this one was surging leading up to the elections. Boom, had a post-election correction, but actually then it really went up. So this is one that's looking good. I like stocks that were, this was very much a penny stock, trading only a few cents a share, and it captured, moved above the $1 level, and so far briefly dipped below it, but it regained it recently. I like to see that. As long as it can defend that $1 level, it's pretty bullish. You can then become listed on, get off the pink sheets or bulletin boards, and maybe this company might move to an exchange. It might already be there. I don't know. Maybe they requested to be listed on a larger exchange. Gives the stock more exposure, more liquidity, allows certain institutions to hold a stock. A lot of mutual funds can't hold stocks that are bulletin board or pink sheets, just prohibited by their prospectus, and their investment objectives. So that's bullish, just like it was with ACBFF, one of my favorites. I mentioned that before. We were buying that one at 55 cents a share, and I mentioned how if it gained above the dollar level, and eventually it did move to a more respectable stock exchange. Here's what I'm looking at now. Most importantly, forget about that line. We didn't have divergence, but we did have a well-defined downtrend line, which we broke out above recently. You can see down here, it was on above average volume, the breakout. Came back in, looked like it was back tested. There's also some horizontal support around 96 cents. This one looks objective here. You can buy it here with a stop not too far below, maybe allow for a back test of the trend line. Like I talked about, you need to give these guys some pretty wide stops. If you're really comfortable with accepting a 30% drawdown on it, you can put your stop just below 70 cents. That's about 68.5 cents a share, that previous reaction low. And again, if you say, well, 30%, that's ridiculous on a stock. Stop loss order, well, you're looking at a stock that over the next year or two can easily go up 600 and almost 700%, and that's just to test those previous reaction highs. Again, if you're looking out long term, if you believe in this sector, believe in the potential, one day these guys will be trading $15, $20, $30, $40, $50 a share. Some of these companies, again, you won't know who the winners and losers are until you look back in time. Only time will tell, but that's why you build your own little mutual fund, so to speak, or your own little ETF by having a lot of these names, and add and subtract to your positioning strategically. That's what I do. What I mean by that, I subtract when I see a divergent high, when I see a tremendous run up, buying climax, suspect a buy the rumor, sell the news thing. That wasn't the case here because the elections were back here. We did get that. But point is, a divergent high, there are technical levels that you can use. Even if you're in this one for the long run, you can reduce exposure, even book full profits, and buy the stock back after a correction. Let the charts be your guide. So that's CNBX. Next one up is CVSI. This one, I think this one was in the news recently with the CEO and hot water. It could be I have so many of these positions that it gets confusing to keep track of all of them. But here's the downtrend line, well defined. We broke out recently, back tested, but then the breakout failed. However, we still have bullish divergence, potential divergence in place. Let's see if it holds. What I'm looking at here, you can see the PPO moving higher, the RSI moving higher recently. So watch for another break above the downtrend line, especially if there's a gap right there. Again, I think that was a news-induced drop. I think there was some shenanigans. I think the CEO was cooking the books a few years ago. I might be mistaking this for another company, but I think it was this one, cooking the books for a deal that he wanted to go through. And, you know, that kind of news gets absorbed as long as a company's fundamentals are intact and their business model. Even if they oust the CEO, who knows, you know, the company may recover. So I do like it longer term. I want to say that. And I've done a little due diligence on this company, and you know, they have some products that I think might allow the company to take off down the road. DEWM, one of my best performing positions lately. This one has just finally taken out these previous highs, taken a lot of volume. There was some news. I think they had some kind of deal with, was it Walmart? Somebody. Again, the headlines there's so many out there, but there was some beneficial news recently. And this one just has a series of pulling back, or a history of pulling back to the support level. And I've talked about this one for years. We pull back, you buy it here. Pull back. These are just temporary intraday breaks below. It's always held support on this level. I mean, it doesn't get any easier or more simple in trading. Pull back. When you see a super well-defined support level, you pull back, you buy it or accumulate scale in there, you sell the rips. This time around, and a lot of these stocks, this is one that I plan to tuck away, and it's taken that out, and I think this one has more upside to go. Would I buy it here if I didn't own it? No. You'd have to wait now for a pullback, and the support levels aren't super well defined, but let's say somewhere in this range. If you get that, it might come on and back test those previous highs, and that would be an objective level to add on. And price targets, don't even ask me at this point in time. You know, the stock's only trading not even a penny a share. You know, I'll move stops up to somewhere around right here and just let it run and then address it down the road. EAPH looks good here. It's at a nice support level. You can see the reactions back here. It's pulled back to support. There's a downtrend line, very well-defined downtrend line, or fairly well-defined, I should say, and then some targets right there. Another target right around 4.5 cents, and then the previous high. So watch for a breakout of that downtrend line. So right here, you're looking at another descending triangle pattern. And again, we're not seeing the whole sector taking that volume yet. That can happen. So you build your own watch list, and if you start seeing one or two of your stocks move, keep an eye on the rest. When you start to see them all taking volume, and a lot of these stocks, let's say 20% or more, all breaking out of support levels, resistance levels, or moving up sharply after hitting support, then you know the momentum players are back in the sector, and that's when you want to play, and you want to get out. When the momentum players are in, you want in, and when they exit, you don't want to be the last guy standing, last guy, a girl or gal, because when the music stops, you might not be able to grab a chair. So that's how those guys work. EDXC, Index Corp. We had a divergent high right here. Heck of a run up. I mean, this guy from back in late 2015 has gained about 850%. So, you know, needed a breather. Nothing goes up forever. Had a divergent high. It was clearly there on the charts. Pulled back in. Had a little downtrend line here. It broke out. It was dancing, and this is the main level I was watching, this uptrend line. And just recently that broke. So there's conflicting technicals on this one. It hasn't corrected a whole lot from the top. And some stocks don't need to. I mean, if they have a really sound business model, they're turning, you know, profitable, making money, growing earnings, you know, it can have a little blip and continue on. So there's a resistance level overhead. It's at support. You can certainly go long there, and if it drops, these are additional support levels. So lukewarm on this one again, only because it just broke this primary uptrend line that comes off the 2016 lows. But I wouldn't be surprised to see it coming back tested, or even, you know, take out these previous highs. And of course, that's the key level, that previous all-time high there around 9 and change, 9 1/4 or so. ENRT, Enertopia Corp, big bearish rising wedge. Really, I have a lot of different colors on this line, but if you look at this trend line, look how many reactions on the top trend line. And then here's the uptrend line, and that formed a bearish rising wedge. And at the highs, we had a steep negative divergence. So that was your signal if you were still long this one, because again, we were probably pointing it out back here. We had a divergent high here too. You can see there was a divergent high, and that stock corrected from that point, dropped, almost 70%. We had another divergent high here, about equal, roughly equal. And so far it's come down 60%. So that might be it. And I'll tell you what, this is a great support level. I'm sorry, good support level. If you look back to the left, what I look for are a lot of reactions. So we have reactions, 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 already a reaction right there. So what would I be doing right now is watching this one. Let's see if we can draw a nice downtrend line there, something along these lines. Watch for a pop above that downtrend line. If so, here's your targets here, here, and then the previous high. All right, ERBB, American Green. Choppy candlesticks. Started to take a lot of volume here. It's a very low price, 1/10 of 1 cent. But there's a pretty good, it's good support around there. So again, highly speculative. I talked about that in the first video. These lower share price penny stocks, pink sheets, bulletin board. Be careful. The risk is high. But then again, so is the gain potential. If this one runs up again, if it holds that roughly 1/10 of 1 cent share level and it goes up here, you're talking almost a 300% return. If it goes up to that, where it had that spike up here, you're talking 865%. So you decide whether you're comfortable with a stock like that. GRNH, Green Grow Technologies, nice downtrend line. Here's the pattern. See the yellow lines right here? You want to see a break of that downtrend line. This is a bullish falling wedge pattern. Here's your positive divergence confirming it. So we have a divergent low. I can see this one walking its way down a little more because we have a very nice support level here, about 3.8, 3.9 cents. So maybe we head down there. But if not, we could break above there anytime, and these are all your potential price targets. GRWG, Growgeneration, relatively new, hasn't been trading that long. Not crazy about this downtrend line because we don't have a lot of price history, but it does look somewhat like a breakout and a back test. And there's a key level to watch, about 248 right there. If it gets above that, then this one could run. HMMJ.TO, meaning it trades on the Toronto Stock Exchange. Horizons Medical Marijuana Life Science ETF. There's that ETF I was talking about. Not a lot of history. It's only been around a couple months, so I'm not putting a lot of weighting on this downtrend line. That's about the best I can draw it. Exclude that little spike there. We have a candlestick high right there, the top of that candle, top of that candle, that wick right there, and another candle. So maybe it wants to break out, little horizontal resistance around 932. Again, my opinion's not very strong, but if you want to go with an ETF so you don't have to build that basket of stocks, that shotgun approach I'm talking about, that might be one option. I just don't know enough about it to give it my endorsement. MCIG, MCIG Inc. There's a uptrend line, broke, that began this long downtrend line. Now we're setting up, and it's nice falling wedge pattern. So there it is. We need a break above that downtrend line. You can see some divergence down below. There's price resistance around 21.7 cents, and then your next resistance zone, target zone right there, and then the previous highs. MCOA, Marijuana Company of America, downtrend line. Look for a break out of that downtrend line. Seems to be holding support right around here recently. But again, there's your buy signal in any of these targets overhead. MJN.V, that's Canadian Venture Exchange, which is sort of similar to our small cap index. Smaller, less companies that aren't well established. obviously entail more risk than those companies listed on the Toronto Stock Exchange. MJN.V, Pharmacan Capital Corp. And by the way, if you're a U.S. Investor or anywhere else, and you don't have access, your broker won't allow you to trade on the Canadian exchange, or they charge you exorbitant fees to do so. A lot of these companies also have shares listed on the U.S. exchanges, and I might not have them all on my watch list. So just do a search for the name, or go to the company's website and navigate down on their menu and look for investor relations, and they'll tell you where their shares are listed on, if they're on multiple exchanges. Nice resistance level overhead at 191. You can see all the reactions back here. It needs to pop above that, and then it can head up to any of these levels there. It'd be a really nice buy. If it breaks this support here around 160, I see solid support around 136, so that would be an ideal buy level. You can also buy it on the bottom of this support level or a break above here. MJNA, we're getting close to the end. MJNA, nice downtrend line there. And this one's whippy. There's some intraday, quite a few intraday breaks. You can see that. So you got to look for volume, wait for volume confirmation. But this one looks ready to pop to me. Nice positive divergence. I have to say this is one of my I'll say one of my favorites right now. It looks real good. So target would be if it breaks above this wedge pattern, convincing break. There's some resistance along the way, but I think it'll shoot up to about 15 cents and ultimately go on to challenge those highs around 21, which would obviously be a double from where it's at now, 10.5 cents. So not a bad trade if it gets there. OGI.V, again, Venture Exchange, Canadian Venture Exchange, Organigram Holdings, simple, uptrend line, break, back test, and it corrected, downtrend line, breakout, and it ripped up from that breakout 37%. Now here's another downtrend line with, I like to see intersecting resistance levels. There's a resistance level at 235 right above the downtrend line, so you want to see 235 get taken out with conviction. And if that's the case, this one should have no problem making it up to 353. That's about a 50% run. If it goes back to challenge those highs, you're talking about a 90% gain on that one. OGRMF, Organigram Holdings. Okay, this would be the U.S. Traded shares right here. So same story, downtrend line break. There's your targets. Same stock, just on a different exchange, so the price levels will be different. Again, that's for U.S. traders. PHOT, Grow Life. Boy, choppy little candlesticks, but it has a series of these downtrend lines. It breaks and rips. And these rips are considerable. It's 366%. Downtrend line, breakout. It doesn't look like much. I'd have to grab it back here to measure, but it was still 40% gain. So here's your most recent downtrend line. Just got to be careful because these are intraday spikes. These might be a single print. This might be someone putting in, most brokers won't allow a market order on a penny stock, but if you did, it can get filled anywhere. I don't know how these crazy fills happen, but they're probably just one or two trades up at that level and it snaps back down. So you want to see volume coming in, but if it pops, if it breaks above this downtrend line, and it's also, you see this horizontal line, that's support. So the stock is at both horizontal support as well as downtrend line support. So it'd be really nice to see that one pop. And at minimum, I think it's going up to that 2 cent level. That's about 130% return. So again, it doesn't take a lot of money to have a decent dollar return. A few $100s. You put too much in these. If you're a big investor, you have a lot of money. Unfortunately, you can't put 10, 20, 30,000. You're going to move the market in this thing, and you're going to have a tough time getting out. Just got to keep it small or stay away. Stay with the bigger names if you have a lot of money. SGBY, Signal Bay. I like this one. Here's a downtrend line, a wedge. It broke out. We've been back testing. This is a downtrend line. Watch this downtrend line for a break. Set a price alert. At minimum, I'd see this target right here, 2.41, 2 cents, 2.4 cents, we'll call it. But longer term, it looks good. I think this one, if it breaks out, will ultimately go on to take out those highs and then some. All right, I think we've got about 8 more to go. SPRWF. It's been dancing on this support zone. You can see those two horizontal lines together. This is where it's been finding support. There's a downtrend line, so a break of that downtrend line would bring you up to 144. The stock's at $1 now, so that's about a 44% return if it happens. Bullish divergence too, to note. That's pretty nice. And you know, this one, it's defending that $1 level. It looks good. It might continue to go. You might want to give that one some room, let it run. THCBF, THC Biomed, very thin trading back here, but it's been taking a lot of volume in recent months, and there's a descending price channel, so it's also at support. There's a gap right there, so you could take a shot here. It's a bit speculative. It's certainly in a downtrend. Take a shot with a stop not too far below, or you can wait for a pop above the top of the wedge to either initiate a position or add to a position, a starter position that you took down here, and then you can see the targets up there. TRTC, Teratech Corp, downtrend line. It broke out, but there's been no follow through. It's sort of limped along without any volume confirmation, but it's also it's just above support here, and I could see this one running up to any or all of these levels over time. And again, you'd need to see the sector really start catching a bid as a whole. TWMJF, Canopy Growth Corporation, downtrend line. I mean, that's clean. That's a very clean downtrend line. There's a little support at my resistance it might run into about 722. Otherwise, it looks good up to about the 1012, 1013 level. VAPE, Vape Holdings, downtrend line there. Looks like it broke out and back tested all along, or we can take that downtrend line and modify it like that and say, let's just wait for a break of that to be safe. And there's your levels. You can see the targets right here. These are the near-term targets. These are your longer-term swing targets up there. Weed.to, Toronto Stock Exchange, Canopy Growth. I think I already covered this one on the U.S. shares. It just looks like it's limping above this downtrend line. If you want to play it safe, you see that little reaction up there that I excluded. Let's, here, let me move that line. Let's drag this up a little and give it the benefit of the doubt. Or not give it the benefit of the doubt. Let's move this line up here and say that it's now challenging downtrend line resistance, needs to take that out. That captures all the reaction highs. Pretty decent resistance around 967, so we might get a reaction there, but I think this one looks good up to 1343. Again, once a sector starts to catch a bid, that's when you're likely to see all these previous highs hit. EMC.V, it's not been trading a long time. You know what, I'm going to stop there. That's the rest I don't have starred, so they're not my favorite. All right, I've covered the ones that stand out right now, and as I always say, if you guys have any cannabis stocks that you follow that aren't on my watch list I haven't covered, please share them with me in the trading room front page. Drop me an email, use a contact form, and I'll render a chart opinion, and I'll add it to my watch list. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.